Welcome to Silverstreak, a beginner's journey into the world of investing in precious metals, comprehending their markets, and the geopolitical forces that drive them. I'm Rotor, a construction worker, a UAV pilot, and a newly bit silver and gold bug. I'm not a financial advisor or a pro. I'm here to share my opinion, learn, and educate as I take the plunge into investing in physical silver and gold. Protecting your money, your wealth, your family, and in these as we stand upon the precipice of this dramatic financial change that is about to occur in silver and other precious metals. I truly believe this is a once in a lifetime game changer for a lot of us who can get ahead of this curve and truly invest in physical gold and silver. So there's a lot going on, and to keep up with that, I'm going to try to do some like current events in the beginning of my episodes. And I think this week we're going to start with this podcast here that I found, and I found a lot of good information in it. This man's name is Michael Gleason. He's with our friends over at the Money Metals Exchange, and we're going to give them a listen. They have a lot of interesting stuff is happening that's going to affect how the market moves. So let's listen to what he's got to say.
Who were hoping Wednesday's FOMC meeting would be a catalyst for a major breakout move were largely disappointed. Precious metals markets closed Thursday. Little changed for the week. As of this Friday recording, gold prices are up a slight 0.7% since last Friday's finish to trade at $1,962 an ounce. Silver, meanwhile, shows a weekly gain of 0.8% to bring spot prices to $27.07 an ounce. Turning to the PGMs, platinum is up 0.5% this week to trade at $945, and finally, palladium prices are down 1.6% for the week to trade at $2,373 per ounce. The metals complex didn't see an immediate boost from the Federal Reserve's dovish policy meeting. Still, the central bank's commitment to an accommodative monetary policy is set to play out not just over the course of a week, but for years to come. On Wednesday.
So do you hear that? So listen to the verbiage that they use. I think it's very important that we listen to the verbiage because he's calling them dovish. He's referring to the Federal Reserve as the central bank. This is kind of like I was saying to you guys, in our last episode that we don't have a bank that's for we the people. We have a central bank that is for we the central bank. We need to figure out a way. How the United States is going to survive with these people, because you can see they're making plans for the next 3 years. I don't know if that means they're only going to be around for 3 years or what, because we have heard a lot of Nasara and Jassara things that are happening around us. The proof is there that things are happening, but yet we still hear stuff like this. So I don't know if it's to slow the market or if it's to just keep people from investing in silver and gold, but we'll listen to it because it's going to have a lot more information here.
The Federal Reserve announced it would continue to hold its benchmark interest rate near zero. That came as no surprise. However, the extent of the Fed's commitment to avoid any rate hikes in the future raised the eyebrows of many veteran observers of monetary policy. Not only did members of the central banking cartel vow to keep rates down for the remainder of the year, they also signaled there would be no rate hikes in 2021. But they went even further than that. All voting members, with the exception of one, pledged to keep interest rates near zero through 2022. And a vast majority voted to maintain current interest rate policy at least until the end of 2023. That's 0% interest rates as far as the eyes can see.
So to me, this is a pure evidence of their manipulation of the market. How can they possibly forecast 3 years in the future of what unemployment is going to be, what different financial strains on the dollar are going to be? They're making these promises to kind of make the market move, to make the market react. So let's keep on listening, and let's see what he says.
The latest FOMC meeting has reassured markets that there is no chance for a rate hike for at least 2 years. The euro-dollar futures market, which trades out much farther than the federal funds futures market, is forecasting a 25 basis point rate hike in mid-2024. That shows that the market is currently expecting.
Now it's interesting he said that because I've been looking at some graphs, and I have noticed that the euro market does show a more true price, a closer to I don't know, just a different. They evaluate it much different than our market does. So when you look at some of these graphs, the euro market, the precious metals tend to do a little bit better with less volatility. Um, but let's keep listening. That's just my opinion and what I saw in the graphs.
The negative effects of the pandemic to linger and hurt the economy for many years to come.
Now, the Federal Reserve codifying that in the statement today, committing to keeping interest rates at that level until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. No economist or market guru on the planet has a crystal ball that can tell them what the GDP or the employment rate or the inflation rate will be 3 or 4 years from now. But apparently Fed officials think they are smart enough to see that far into the future and are able to know today what the optimal interest rate will be then. That it?
And again, so there we go. They're pretty much, echoing kind of what, I was saying about how things are manipulated.
Is effectively zero. The truth is that all they know how to do is react to signals given to them by markets, politicians, and banks. If the repo market freezes up or stocks on Wall Street tank, they roll out more stimulus. If the government needs to expand its borrowing capacity by trillions of dollars to finance deficits, then they commit to buying more treasuries. If the leveraged financial system requires more inflation to eat away at the real value of otherwise unpayable debt obligations, then they commit to depreciating the currency at a more rapid pace. The Fed is continuing its $120 billion per month quantitative easing program, which is...
So we have seen inflation of the dollar. We have seen deflation. We've experienced hyperinflation. And we've seen now the Fed saying there's going to be no new interest, zero interest rate for the next 3 years. But what they have handed us in true 2020 fashion and form is reactionary inflation. So now they're going to be able, I don't know if this gives them more control of the market or it's going to help the market. What I do believe it's going to do is take the dramatic volatility out of the market. I think by doing this, we're not going to see the dips that we saw in the past. So the chance of it dipping, lower than $24, $25, like I said on the last episode, this is getting shored up now by what they're doing. We're going to see the graphs are going to start to look more stair-step in nature and less jagged. We're going to see it ride on the floor. We're going to see it catch a plateau and then go up. It'll go up. Probably we'll see at points as things progress for the evolution of the dollar and the USD. We're going to see this stair-stepping effect probably, be pretty equal or moderate at first, and then who knows, maybe there'll be bigger steps along the way. But I do believe that's the change it's going to have, and it's going to kind of quell some of the volatility and strengthen the market. And I think these guys feel the same way. So let's finish out this podcast and let's listen to what the pros have to say.
Ballooned its balance sheet to more than $7 trillion. And it won't turn off the monetary spigots until government-measured inflation rates exceed 2% over some unspecified period. An inflation rate above 2% with interest rates remaining well below that level would be a hugely bullish driver for precious metals markets. According to the World Gold Council, in years when the inflation rate has exceeded 3%, the price of gold increased 15% on average. Gold and
So this is exactly like our first episode when I showed you guys the graphs and we started deciphering the graphs, and I showed you that when the inflation goes up and the dollar's in trouble, the metals go up, they take a run, they go as well, and that's typically what they're showing. But now with reactionary inflation and a interest rate that's not going anywhere, the increases that we see in silver are going to be truly on silver's merit and the reevaluation on the cost of this commodity. So here we go. Let's finish her out.
Do not merely keep pace with rising inflation, they tend to hugely outperform it. Of course, if there comes a time when the Fed is forced to aggressively hike rates above inflation to bring it back down, then the metals can suffer outsized declines. An environment of positive real interest rates and declining inflation rates do not appear to be something metals investors will need to worry about anytime soon, and probably not for the next few years. There will be inevitable volatility along the way, but it's hard to see anything but a continuation of a major bullish trend going forward. The coronavirus lockdowns were certainly a catalyst for a surge in physical buying this year. Even though bullion market conditions have since settled down, sales of coins, rounds, and bars continue to far outpace those of a year ago. We are eyeing the upcoming election as the next potential catalyst. With polls tightening between President Donald Trump and former Vice President Joe Biden, fears are growing over a contested election that could drag on for weeks. An expected torrent of mailed-in ballots could overwhelm state election systems. The backlog could spark highly charged fights in the courts and on the streets over which ballots get counted and which ones get thrown out as late, incomplete, or fraudulent. If there is anything sure to rattle markets, it's uncertainty. During uncertain times, when the only thing that can be counted on from the authorities is to keep printing currency, precious metals provide a rock-solid and necessary counterbalance to conventional risk assets.
And there you have it, guys. That was Mike Gleason from the Money Metals Exchange, and he's basically telling it how it is. That's one thing I do love about that company is the people that work there, the people that you're going to encounter when you deal with Money Metals. They're going to tell it how it is. They're very real. They're very transparent, and they are there to help us transfer our debt notes into gold and silver assets, or if you can afford platinum and palladium and rhodium, we'll get into those in a little bit. So let's do that. Let's take a look here at some gold and silver and check out what we got going on. We're going to take a look at the different types of assets. We got a lot of new people that, they just said a huge surge in the purchasing of physical gold and silver. So that's someone like me. That's someone who has started, within the last 6 weeks, because we've watched the market, and now we realize that everybody's aligning in the same way. There's going to be a major correction, a major evaluation, and we're going to see this asset maybe go up 10 times in the next 24 to 36 months. That's pretty steady growth. So let's see. We all know silver bars and coins and gold bars and coins, but with silver, there's something else that's out there, and that's junk silver. Now, Money Metals has some junk silver, and you can buy it, and I highly recommend it. It's a good way to diversify your portfolio. This metal here is also a fractional metal, so it's small. We all know change, dimes and quarters and nickels. However, this stuff here is silver. It's like 70% silver, and it will be a good fractional down the road when it's worth a lot more money to use for trading and bartering and, liquidity. When you don't want to, liquidize your silver eagles and your bars and that, something like this might be very good to have around because you don't mind getting rid of it. All right, moving on, we have gold. Gold has been the standard, always will be the standard of wealth, kings and countrymen, right? So we all know gold. Gold has been around. It's got like silver. Silver's got a lot of tech uses too. So does gold. It's used in a lot. Look, these are indispensable metals. These are metals that mankind cannot live with. They're used in medicine. They're used in technology. All the metals we're looking at here tonight, this is why they're commodities. Here we have platinum. Platinum is a beautiful metal. It often, it looks a little bit like silver until you hold it and look at it a little closer. It's got a much different sheen. The metal is a lot different, even though they have the same kind of hue, but they're different. Platinum, right now it's like $980 an ounce. So it's an expensive tech metal. It's a commodity. It's hard to find on the earth. So it's one of those that are there. So here we have palladium, and I do believe palladium is another extracted element from the byproduct of refining platinum and alloys. And I know this is also used in a lot of satellites and tech stuff. Medical field uses a lot of it. I think it's used in some rockets that go to outer space and all that great stuff. So, and that's why it's carrying a great value. I think it's palladium, I think, was somewhere around $2,000 right now if I remember correctly. And then we have rhodium. Rhodium, this stuff's crazy. It's like $14,000 an ounce. It's used in catalytic converters or in the automotive industry, and it is very difficult to mine and extract from the earth. So it carries a big premium when you buy it. And you can see it in these assay packs. You can buy gold, comes in assay packs. Platinum and palladium also come in assay packs. I'm pretty sure you could probably find silver in an assay pack too. And an assay pack just means an assayer looked it over, verified it was the material it said it was be, the weight it said it was be, and then it's assigned serial numbers and it's sealed in these plastic packs. And it's actually really nice because you can handle it, you can look at it, and it's, you can register it, and that's a big deal when you have asset and you get down the line and you have so much wealth that you want to diversify even more. You're going to want asset that you can register, asset that's recognized by holding companies so you can make money with your money. All right, and here's one that's kind of interesting. These are new. I haven't seen these too often in too many places. I am going to be buying a bunch of these. I'll tell you right now. These are the Nevada Goldbacks. These are Aurum Goldbacks. These are Aurum bills or Aurum notes. And Aurum is like a liquid gold that they have figured out how to layer very thin sheets of this very fine liquid gold in between polyester. And they make these beautiful dollars. Now, in 2011, Utah created a currency act, basically allowing Utah to have its own currency, and that's what they're doing. These are actual currency. Wherever gold is accepted as currency, these are accepted as currency, and they are popping up in every exchange. And as quick as they're popping up, they're selling out. So if you can get your fingers on some of these gold Aurum notes, they're not too bad. The $1 gold Aurum note, which is 1/10,000th of a troy ounce of gold inside the note, is like $4. So when gold goes up and these things are worth a little bit more money, this is a great way to get into fractional gold for people like me, everyday people who don't have a lot of other currency or asset to exchange. These are going to be a fantastic way to diversify your portfolio and have a fractional gold that is verifiable and easy to barter and trade with. This is the gold standard. I think we are going to see a lot more of this right here. Maybe other states will pick up on this and we'll see more. Maybe we'll see a Texas note and a Florida note. Maybe all these commonwealths, a Pennsylvania note. Can you imagine how beautiful that would be with the Liberty Bell on there or something? So, all right, well, let's move on. And the next one is copper. Now, copper is not traded on the commodities market because it's so abundant. However, copper is an industrial metal. Copper is underrated. And right now, if you didn't have a lot of money and you said, well, Rotor, you say diversify, but all I can really, the highest point I can get in at silver, and that's the truth for a lot of us. I can't get into anything else. However, this is a great secondary metal. Copper it's gone up in the last couple of years. Now, not the big jumps that other metals have made, but it is steadily increasing. In fact, we've seen increases in the last 30 days. So I picked up a bunch of these copper rounds, and they're not bad. They're like $1 right now, and you can get them anywhere. You can get a 1 pound bar for like $16. Now, you throw it in the closet, in 3 or 4 years from now, who knows? It might be worth $50. But it just it's still an increase. It's still diversifying your portfolio, and it is an industrial metal. It's used in houses and electrical wire. It's used in just about everything, copper pipes. So when we start building all these spaceships and all these satellites and all these advanced technologies that are going to go to the moon, and they want to build this stuff on the moon, they want to build this stuff in outer space, all this metal has to come from somewhere, and all this tech metal is going to come. There's going to be, it's going to be one of the forces that drive the market is going to be these metals. So I highly recommend diversifying with as much as you can. And copper is a great way to get in cheap on something that's going to go somewhere. All right. Well, big thank you to our people at Money Metals Exchange for setting up the promo code silverstreak for us. It's a one-time promo code. You can go enter silverstreak, and then you will get, with a verifying purchase of $100 or more, you'll get a half-ounce round, a Paul Revere round, and free silver is always good. It's always nice to add it to the portfolio. They have some great options. They have some nice starter packs. I think they have a first-time silver purchasing pack with like 4 ounces of silver, some different rounds, and some different eagles for like $130. It's absolutely great way to get into it. They're also running a secondary promotion this month, I think till October 9th. If you buy $1,000 worth of silver, you'll get a free half-ounce buffalo round. And then you use the promo code, you'll get another half-ounce round. So you get a free ounce of silver, plus that'll put you like at 35 ounces of silver. And I think with shipping and everything, before I looked at it, it was like $1,050. But if that is true, it comes up to $1,050, and what they're saying is true about silver going to its reevaluated price somewhere maybe $300 or $400. You're looking at that $1,050 investment in the next 24 to 36 months, possibly being $10,500. So that's, to me, that's a no-brainer. That's a winner. That's a low risk. That's what they're talking about. And without the ability to truly forecast it, who knows? It could go higher. The markets are favorable. The price is right. I suggest you guys get into silver. Yeah, and there it is. There's the half ounce Paul Revere round, and yeah, it's beautiful. So put in the Silver Streak promo code, and we'll catch you next time. So thank you very much.